Hi everyone, today we are going to talk about why is Warren Buffett so successful in investing and earning money. Okay, let's get started. Warren Buffett, widely regarded as one of the greatest investors of all time, owes his remarkable success in investing and wealth building to several core principles. These principles are based on his deep understanding of business fundamentals, his disciplined approach to investing, and his long-term perspective. Below are some of the reasons for Buffett's success, supported by his quotes, investing cases, and evidence. Number 1. Value investing. Buy undervalued companies. Buffett follows the philosophy of value investing, which he learned from his mentor Benjamin Graham. Value investing involves buying stocks that appear to be undervalued relative to their intrinsic worth, with the belief that the price will eventually rise to reflect their true value. Buffett once said, "Price is what you pay, value is what you get." Okay, now I'll give you the first example, Coca-Cola. One of Buffett's most famous investments is Coca-Cola, which he started buying in 1988. Despite Coca-Cola being a well-known brand, Buffett saw that the company was undervalued given its long-term potential and global reach. He purchased $1 billion worth of shares, and Coca-Cola has since become one of his best-performing investments, contributing billions to Berkshire Hathaway's profits. Now let's take a look at the proof of success. As of today, Buffett's Coca-Cola shares have appreciated tremendously, and he continued to receive substantial dividends from the investment. The stock price grew many times over since his purchase, and Coca-Cola's strong brand has provided consistent earnings. Okay, now let's talk about the proof of success. As of today, Buffett's Coca-Cola shares have appreciated tremendously, and he continued to receive substantial dividends from the investment. The stock price grew many times over since his purchase, and Coca-Cola's strong brand has provided consistent earnings. The second most important principle for Buffett is to focus on long-term investments. Buffett's success is largely driven by his patience and focus on long-term value rather than short-term gains. He is known for holding stocks for decades and rarely engaging in market timing or speculative behavior. His famous quote captures this mindset: "Our favorite holding period is forever." A good example is American Express. Buffett first invested in American Express in the 1960s after the company's stock plunged due to financial scandal. Buffett recognized that despite the crisis, American Express had a strong business model and customer loyalty. He bought a significant stake, and over the decades, this investment had grown enormously. Today, American Express is a core holding in Berkshire Hathaway's portfolios. Okay, now let's talk about the proof of success. Buffett's decision to hold on American Express for the long term has paid off. The company recovered from the scandal and went on to dominate the credit card and financial services markets, generating substantial profits for Berkshire Hathaway. Number 3 principle: invest in business you understand. Buffett stresses the importance of investing in industries and businesses that he fully understands. He avoids sectors where he lacks expertise or the ability to forecast long-term outcomes. He said, "Never invest in a business you cannot understand." Here example, tech stocks. For many years, Buffett avoided investing in technology companies because he felt that he couldn't understand them well enough. It wasn't until 2016 that he took a significant position in Apple after recognizing the strengths of his business model, brand loyalty, and cash flow generation. This cautious but well-researched entry into tech stocks has since proven to be a huge successful move. Here is the proof of success. Apple is now the largest position in Berkshire Hathaway's portfolio, and Buffett has described the company as one of the most valuable businesses in the world. His investment in Apple alone has made Berkshire billions of dollars in capital gains and dividends. Principle number 4: emphasis on strong management. Buffett places great emphasis on the quality of management when selecting investments. He looks for companies that are not only financially strong but also run by honest, capable, and shareholder-friendly management teams. He once said, "When we own portions of outstanding businesses with outstanding managements, our favorite holding period is forever." For example, Geico. Buffett first invested in Geico in 1951, recognizing the insurance company's strong business model. Over time, Buffett increased his stake in Geico and eventually bought the entire company in 1996. One of the reasons for his investment was Geico's highly efficient management team, which had a track record of growing the business while keeping costs low. Today, Geico is one of the most valuable assets in Berkshire Hathaway's insurance business, providing a steady stream of earnings that Buffett has used to fund other investments. Principle number 5. Avoid debt and leverage. Buffett is famously adverse to using excessive debt or leverage in his investment strategy. He believes that borrowing too much money to invest can lead to ruin, especially in volatile markets. Instead, he prefers to rely on the profits generated by his businesses and investments to fund new acquisitions. Buffett once stated, "I've seen more people fail because of liquor and leverage. Leverage being borrowed money. You really don't need leverage in this world much. If you are smart, you are going to make a lot of money without borrowing." Okay, I'll give you an example. 2008 financial crisis. During the 2008 financial crisis, many companies collapsed due to high levels of leverage. In contrast, Buffett's Berkshire Hathaway, with its conservative use of debt, was in a strong financial position. This allowed Buffett to act as a lender of last resort, providing capital to companies like Goldman Sachs and Bank of America during the crisis in exchange for favorable terms. These crisis-era investments turned out to be immensely profitable. For example, Berkshire Hathaway earned billions in profit from its investments in Goldman Sachs and Bank of America as those companies recovered. Principle number 6. Margin of safety. Buffett emphasizes the importance of buying companies with a margin of safety. This concept, originally from Benjamin Graham, means purchasing stocks at a price significantly below their intrinsic value, providing protection against errors in judgment or unforeseen market fluctuations. Buffett ever said, "The 3 most important words in investing are margin of safety." For example, BNSF. In 2009, Buffett made a huge bet by acquiring BNSF, one of the largest railroad companies in the U.S., for $44 billion. He believed that railroads, despite being an old-fashioned industry, had a strong growth potential and would be vital to transporting goods across the U.S. Buffett bought BNSF at a price that allowed for a large margin of safety, given the company's strong cash flows and long-term importance to the economy. BNSF had been a stellar performer within Berkshire Hathaway, providing steady and increasing profits over the years. This investment exemplifies Buffett's ability to find value in industries that others overlook. Principle number 7. Stay disciplined and rational. Buffett's temperament is one of his greatest strengths. He remains calm and rational during periods of market euphoria or panic. He once said, "Be fearful when others are greedy, and greedy when others are fearful." For example, 1973 to 74 market crash. During stock market crash of 1973 to 74, while many investors were panicking and selling, Buffett was buying. He viewed the market downturn as an opportunity to purchase great companies at a bargain price. Over the long term, this approach paid off handsomely. Buffett's ability to keep his emotions in check and stay disciplined during market downturns has allowed him to capitalize on opportunities when others are selling in fear. This approach has been central to his long-term success. In conclusion, Warren Buffett's investing success comes from his adherence to value investing principles, his long-term perspective, and his focus on businesses he understands. His strategy is characterized by patience, discipline, and a strong emphasis on business fundamentals, which has allowed him to generate extraordinary wealth over decades. His timeless quotes, proven track record with companies like Coca-Cola, Apple, and American Express, and his ability to remain rational in all market conditions have solidified his reputation as one of the greatest investors in history.